Michael Chiu, Senior Investment Manager at ING IM Asia. Good morning, Michael. Thank you for joining us. It is a bit of a headache, isn't it? Inflation in China. What does it mean for us from an investment standpoint?
I think the market has been worrying about the inflation outlook and the subsequent tightening measures taken by the Chinese government, basically in the past 12 months. And that is one of the reasons why the stock market has not been doing well. Up till very recently, where finally, we are seeing some silver linings in terms of the inflation outlook in China. And in fact, if you look at the March inflation number, although year-on-year is still going up by 5.4%, but on a month-on-month basis, it's already stabilizing.
Now, you say that many investors are underplaying three themes. One of them, and we'll go through them all, is the internationalization of the renminbi. Just talk to me about this first.
Yeah, I think it is interesting to see a couple of days back, S&P is talking about potential downgrade of the U.S. credit. Now, what we are seeing is the traditionally very hard currency are not that hard. And the Chinese answer to that, interestingly, is to make their local currency not that local. So the way they're doing it is actually to introduce the offshore renminbi, mainly in the Hong Kong market, and to, I think, encourage the use of renminbi more like a trade settlement currency now.
Yeah.
Later on, maybe as an investment currency, and finally, maybe as another reserve currency.
And playing into that is the integration of financial services.
Definitely.
And just explain to us why that's relevant.
Sure. I think with the goal to make the renminbi more internationalized, they have to make use of the Hong Kong international platform. One way to do this, of course, is to ask some of the Hong Kong banks to be the clearing bank for this offshore renminbi business. And you could imagine the growth in the offshore renminbi business can be very staggering. As we have seen in the past 12 months, the growth in the volume of renminbi has gone up by more than 500% in terms of the renminbi deposit. So this is one area. And of course, the other one would be to encourage more companies to seek listing in the Hong Kong market. So, for example, the Stock Exchange of Hong Kong can also benefit from the trend.
Yeah, and you're highlighting the gold industry in China as gold hits a record high, $1,500 an ounce. You're highlighting the strength of gold mining in China. How can we take advantage of that?
Sure. I think gold for the Chinese investor is on one hand, of course, about the price acceleration, but on the other hand, it's also about the volume growth as well, where if you look at the total gold mining outputs in the past 10 years for the whole world, it has been very stable. And in particular for the traditional countries like the US, Australia, and South Africa, the output has been declining in the past 10 years. The only country that has been able to boost up their output was actually China, that has grown their output by more than 80% in the past 10 years. So before 2002, actually Chinese companies on a private basis are not allowed to do gold mining. Since then, they changed the rule, and now more and more private enterprises are allowed to do so. And with the growth of that, we as a fund manager can pick a lot of good stocks that can involve in this business.
Okay, Michael, thank you very much for joining us today. Michael Chiu, their Senior Investment Manager at ING IM Asia.